Anne-Marie, thank you. Welcome. I'm so excited to have you on Spark TV today.
Thank you. Thanks for having me.
As we said before we hit record, it has been far too long. So I am very excited to catch up with you and all the amazing things you've been up to. But let's kick things off just by telling everyone who you are and what you do.
Okay, so hi everyone. I'm Anne-Marie Birkill. I'm one of the founders of OneVentures, a venture capital firm that invests in disruptive technologies across healthcare and IT, opportunities that have global impact and the ability to transform markets. So we are now 14 years young. We launched our first fund in 2010. It was a very small $40 million fund, and we're creeping up very slowly on having $1 billion in funds under management.
Wow, that's impressive. So I'm always so fascinated because I talk to so many women in business on the, I guess what you would think is traditional business side. So have a product, selling something to a customer, growing that, grow a team, da, 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 da. But, you know, a venture capital firm is a business, you know, there's a whole nother side. You know, I guess when we talk to women in business, we're always just thinking about getting funding, not about actually starting a company that provides the funding. So how did you, before we get into that, how did you actually get there? What was the career history before starting OneVentures?
Well, I have a science degree, so I've always been curious about, what makes things work, especially in the sort of natural sciences area, and a curiosity about how to take science and technology from an experiment or the lab bench or the backyard garage and turn the outcomes of those efforts into products and services. So while I was never actually a scientist working at the lab bench, I went quickly into working in commerce in the field of actually plant biotechnology, so developing new cultivars of food, foliage, forestry plants, and propagating those and selling them internationally, mostly into the US and Europe, as well as Australia. And what I was really doing there was, transforming science into products. And that was really what was the foundation of a career in technology commercialization. So since that early part of my career, which spanned about 15 years, I've worked at UniQuest at the University of Queensland, where I was able to take the skills that I'd learned across a much broader portfolio of work. So I learned to work with medical technologies, for example, and mineral technologies and a whole range of different things, but the process is still the same. I was CEO of iLab Incubator for a while. I had my own consulting business. And then in about 2009, I met my co-founder, Dr. Michelle Deaker, and subsequently Dr. Paul Kelly, our third co-founder. And together we launched that first fund. So that was really the genesis of OneVentures and a little snapshot of my journey to get there.
I love it. So how did you go about raising $40 million to launch your first fund? You know, I often talk to women who are trying to raise a couple of $100K or then maybe a couple of million in their Series A. But what's it like going out and saying, hey, give us $40 million? What's that process like?
Well, I think let me just sort of set the scene a little bit, because remember 2010 is kind of right off the back of the GFC. So really frightening big things had happened in the financial markets. So it was a particularly difficult time to do this work. But like many venture capital firms of our vintage, we got our start with a license from the government's Innovation Investment Fund scheme. And government gets a lot of bad raps, but I'm going to give them a big shout out, because were it not for the foresight of the federal government in seeding the venture capital ecosystem back in those days with these schemes, then we probably wouldn't have the vibrant venture capital scene that we have now. So we had acquired a license on the second attempt, I might add. It wasn't an easy process. For $20 million worth of federal government funding, on the basis that we matched it with $20 million worth of private investment. And prior to the GFC, we actually had commitments from some significant size institutions, and we actually thought we were going to raise a much bigger fund at that stage. But the GFC happened, those commitments fell away, and we just started a process of door knocking on the doors of high net worth investors and family offices. Now, Michelle and Paul, unlike me, were serial entrepreneurs, so they had actually been in the situation where they established firms and realised gains for investors. So we started with that sort of base of investors that knew them well and knew that they were, good at transforming a dollar into 10, if you like. And then there were subsequent introductions into their networks and a whole lot of shoe leather, just managing to sort of scrape together that $20 million in matching funding. So even though we had to, in today's vernacular, pivot from our original capital raising strategy, it's become something that's stuck with us. So even now we don't have, other than the government in a couple of our funds, any institutional funding. Our investor base is all high net worth investors and family offices, a very loyal investor base, and an investor base that brings more than just capital, because as you can imagine, many of those people are the captains of industry in Australia. So often we're able to leverage their networks and or their expertise to help us make our portfolio companies successful.
I love it. And I think it's really interesting because I feel like VCs do get a bit of a bad rap. So, when we're in the startup land, especially in this women in business land that we're in at the moment, we just sort of tend to regurgitate the stats and don't really think about VCs as a business in and of themselves, or the founders, or the effort that you go to actually raise capital. So it gives me a little bit of life knowing that you had to pivot, knowing that you had to door knock, knowing that you've basically gone through everything that a woman trying to raise $1 million for her business has gone through.
You're absolutely right. And I think it's, not only were we one of the early venture capital firms, we're also, to my knowledge, still one of the only venture capital firms to be founded with 2 out of 3 female partners. So we were not only raising at a difficult time in a nascent market, but also going against the sort of mould of what people thought VC should look like, which was typically older white men out of the finance sector, if I can put it that way. And so Paul's a doctor, Michelle's a scientist like me. When none of us there's not an accounting degree between us, or a finance degree or a law degree, which was the sort of typical way that venture capital firms sort of spun out at that stage. So we faced a lot of barriers because we were different, but I think also that difference allowed us to point to what's become an important part of our DNA, which is that we really believe that to be able to get the best outcomes from our portfolio, we have to be able to include our operational experience or apply our operational experience to try and help them be successful. So we're very hands-on investors. The things that we've done well and the lessons that we've learned, we apply all the time in our portfolio. And that's been tremendously important in terms of getting the best out of those in terms of performance.
Yeah, and it is really interesting as well. I love that you mentioned that the portfolio of investors that you have are also experts, captains of industry, people that can bring more than money to the portfolio. I think that sometimes when we as business owners raise capital, sometimes it's under duress. Perhaps it's not always the right time for our business. So a lot of times we can be, I guess, err on the side of, I don't care, we just need to get funds in the door. So I always love to, what is your perspective on the idea of smart money and bringing that into a capital raise?
Well, I think, look, the first thing that I would say is, if I could advise any entrepreneur on one key thing, it's don't raise capital under duress, because as you say, you're going to have to accept terms that are not necessarily going to be beneficial to your business. So try and have a good capitalization plan from the get-go, and take capital when it's available, not when you have to have it, because as you say, you'll accept it under duress. But I think it's really important that, as much as we as investors want to get to know our entrepreneurs and the executive leadership team and the companies that we're interested in investing with, it's really important for entrepreneurs, founders, executives to get to know the individuals in the firm, the investment firm that they're working with.
Mm.
Because, I mean, it really is, it's like a marriage. I mean, if I give you an example, one of our early investments in our first fund was in 2012, and that's a medical device company called Baxis out of the University of Queensland. We're still the main investor in that company. All these years, here we are in
Wow.
2024, we still sit on the board. We still support that company. We invest in every round. So, you know, I think our relationship with that firm is about as long as the longest employee. So it can be a very long relationship. You want to have an investor that's going to be there to celebrate the good things and also to help you lift you up out of the inevitable bad things that happen in a
Mm.
firm, and be truly a partner, not merely a financial partner. I think it's critically important. Now, I mean, there is a place for perhaps a passive investment partner, you know, in the life cycle of a company, but typically in the early days, I think it needs to be more than just here's some money. Come back when you turn that dollar into three or even better 10.
Yeah, and it is interesting because I feel like, especially first time startup or business owners, there is just so much that we don't know, so
Mhm.
much that even bringing capital into the business, that now means we have shareholders, we have shareholder meetings, we have a board, we have board meetings. As a first time startup founder, there's a lot that goes along with that process, operational stuff that we just don't know about. So having people
Mhm.
come in that can provide a level of guidance, and I love support when the inevitable hard days happen, is a great idea.
It is. And I think one of the things that, can seem like a bit of a pain at the time is accountability and reporting.
Mm.
In the early days of your venture, you've got so much happening. You just described it really well then, that being asked to provide the monthly or quarterly or whatever report or write a board pack or whatever can just seem like an unnecessary overhead, if I can put it
Mm.
that way. But I think it's also a good training ground for the future, because if your firm grows, eventually you're going to be accountable to a board of some significance. And it's important to sort of learn those skills, how to hone them, how to, as one of our favourite founders says, allow good news to travel at the speed of sound, but bad news to travel at the speed of light, and accept those consequences and the advice and the support that comes along with all of those outcomes on the spectrum from excellent to not so great.
I know, and it is interesting though. I think that perhaps the negative gets the limelight a little bit too much. But if you do have people on your board or in your shareholder community that do have this breadth of experience, providing that reporting, providing that insight, providing those board packs is a real opportunity to have somebody take a look at what's going on in your business that actually wants the best outcome.
Absolutely, absolutely. And look, I think it's probably universally true to say that most sophisticated professional investors understand that occasionally an investment will go wrong.
Hmm.
And companies can fail, be wound up, however you want to put it, under circumstances where everybody knows that the entrepreneur has done the best they could, that for whatever reason, the market, competition, whatever, not everything works out. But if there's been transparency, openness, good communication, clarity around the efforts that have been made to recover the situation, etc., then even a kind of a negative investment experience doesn't leave a bad taste in either's mouth.
Hmm.
But if there's a situation where perhaps the founder entrepreneur is keeping their cards close to their chest, they're very defensive, they don't share the efforts that they're taking to try and recover the situation, then it can become quite a poisonous relationship. So I'm trying to portray a picture that we're all in it together is a lot better than being defensive and guarded with information.
Absolutely. And I think that, you know, Once a board member said to me, and it was great advice, just get bad news out on the table as quickly as possible. And I think
Mm,
that there is a tendency to go high, we want to just put our best foot forward. We want to have it all figured out. We want to be the superstars. We want everything to be
yeah.
going swimmingly. But I think the advantage in being open and honest and transparent with whatever the situation is those people around you do have your best interest at heart, and they want their money to succeed. So of course they're going to, do as much as they can to support you and give ideas and strategies. So I think sometimes it's just, we need to get out of the idea that we need to have everything figured out. That's the reason why we have a board, or have shareholders around us to support us.
You're 100% right, Danielle. And the other thing that I would say is that it might feel like this has never happened to anybody else, but chances
Yeah.
are, whatever the challenge is, it has. And if you think about OneVentures, I mean, look, I've kind of lost count, but our investment team is 15 or 18 people. And people that have had long careers, people who've had shorter careers, international careers, across a whole range of different verticals in the market, as entrepreneurs, as senior executives, as investors. So if you have a good investment partner, what you'll typically find is you may have a primary contact, but in firms like OneVentures, if we have a challenge with one of our portfolio companies, we'll share that with our team and we'll bring the collective wisdom to bear to help resolve that challenge. And I've seen that happen time and time again where, I certainly don't know everything, but if I look into the sort of brains trust at OneVentures, someone will probably have been through this before. And if they haven't, they'll know somebody else that they'll introduce me to. And together we can try and bring all of that experience to bear to try and facilitate a good outcome.
I love that. I think it's amazing. So, talk to me about the landscape. So, do you think that, and this is probably personal outside looking in, do you think that the capital raising landscape has changed over the last decade? I feel like, a decade plus ago, it was very much high growth users, no profit, show traction, spend all of your money, da 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 da. And then most recently, where I've had conversations with founders, it's been very much need to show traction, need to be profitable, XYZ. Do you think the landscape has changed? And do you think there's something that VCs are looking for in a business today?
Look, I absolutely think it's changed, and I think it's changed just in the last few years.
Mm.
From sort of if you sort of want to characterize it as sort of pre-pandemic, growth at any cost was really
Yeah.
the mandate. So take a lot of money, grow really fast. We'll fix profitability another day.
Mm.
To you may be investing in growth, and we want to see good growth metrics, but we also want to see a path to profit. So I think definitely that has changed in the last sort of few years. I also think the investment landscape in terms of product availability has changed. So if I
Mm.
just even think about our sort of 14 years at OneVentures, when we started, there was very little sort of seed stage funding. So that's why we started as an early stage investment fund. You fast forward sort of 4 years to when we launched our second fund, and there was very little growth. And then a couple of years later, Australia had hardly heard of venture credit or venture debt. So we launched a
Mm.
venture credit fund. So this is really just an example of how, there's no sort of one size fits all in the investment landscape anymore. So if you think about us, we have a growth product, a healthcare product, a venture credit product, and other firms similarly have a diversity of offerings. So I think tying this back to your initial question, there are different products that suit different stages and different types of companies. So if you're looking for a mix of later stage equity and perhaps a little bit of venture credit, which is non-dilutive, you're probably going to be a firm that can demonstrate a pathway to profit sooner rather than later, or some way of generating free cash to be able to repay that loan.
Mm.
If you're a high growth, then you're looking for a different sort of an investment product. So I think that diversity is really exciting for the entrepreneurial ecosystem, and it also is exciting for investors to have access to a range of different products in the market.
Yeah, absolutely. And it probably just, I guess, raises a good point that there are options now. I feel like,
Mm,
perhaps some time ago, it was just that raise at all costs, like very, singular model. Whereas now there are so many financing options. You mentioned venture credit. Obviously, we've been talking about capital raising, equity. There's also crowdfunding now and
mm,
crowd equity and all of that kind of stuff. So, it
mm.
is a really interesting point to really think about what your business is aiming to achieve, where you are on that path to profitability, and what type of financing would actually support your growth.
Yeah, you're right. And I think one of the things that I always like to say in these conversations, because I think it's really important, is that actually venture capital is only really suitable for a tiny proportion of businesses. And I think too often it's held up as the sort of holy grail, the ultimate success. I got my company backed by venture capital. But realistically, it's really for a small slice of businesses that are high growth with the potential to, turn a dollar into 10 in a sort
Yes.
of relatively short period of time. And there's a whole cohort of excellent businesses for which venture capital is not suitable, where other forms of finance, including one of the things that we haven't talked about is grant funding,
Mm.
incubators, accelerators, are actually far more suitable for the sort of style of business.
And you do raise a really good point around, the headline. I got backed by the venture capital firm. I raised millions of dollars. That's probably a gripe I've had with the startup industry is what
Mm,
is heroed, what is romanticized, and I certainly on my business journey, scrunch, not spark, felt like that was what you did. You went out and raised
mm,
capital, you had billions of employees, you got the big fancy office, you did all the things. And it was a bit of COVID was a real rude shock to us when the industry did change and went, no, that's not how we
mm,
play and do business anymore.
mm.
I think that it's really important, not as a startup founder, not to get kind of lost in the headlines and really think about the business you're trying to grow and what that end game looks like.
You're right. And if you think about, any diversified business, whether it's I don't know, a supermarket or a
Mm.
sort of a multi-product technology company, often there's kind of a bread and butter offering, right? And I think if you sort of think about the business ecosystem in the same way, the great massive value is created in those companies that I might call bread and butter companies. They grow well, they're profitable, they employ a lot of people, they're sort of they've got diversified client bases or diversified products, so they've got stability. And they're really the heroes of the business ecosystem, if you like, even though, as you say, they actually get no press. I mean, we're a nation of small and micro businesses, Australia, and yet all the financial papers talk about other sort of massive companies. And I think we really need to give as much bandwidth to those nice little earners that are, generating stable jobs and stable returns for their shareholders.
I know. I just want a headline that says, XYZ company is profitable, something boring.
Yeah.
Something super boring. But it is an interesting point. So, okay, so if anyone listening is perhaps a startup who is right for whether it be angel investors or VC funding, and they're going down that path. Now, our audience is specifically female founders.
Mm-hmm.
Would you have any advice for somebody that is embarking on their first round of capital raising?
Look, I think the first thing to do is to make sure that you sort of meet the mandate of that part of the market. So I would say find someone like me, and please don't flood me with a million
Yeah,
requests for meetings.
leave Anne
But
Marie alone.
no, I don't. Look, I have an absolute soft spot for any female entrepreneur. So I mean, I don't mind if I get the odd request for a meeting out of the blue. But find someone that's in the industry who can give you an honest appraisal of your business,
Mm.
and it's and what the best sort of source of funding is, because to be honest, in the many decades of my career, I've seen a lot of people and a lot of women beat the door of angel and VC funding when the likelihood of them being successful in achieving it is very low. Not because they're women, but because their businesses are more kind of a lifestyle business, or a business that would be better grown with bootstrapping or through some sort of crowdfunding mechanism, or I know that actually there's a couple of grants over there that could set them up for success. So I think it's really important to just make sure in the first instance that your business is a good fit for that funding instrument. And if it is, then spend a lot of time getting the story right, understanding what the end point is, because as you rightly identified at the beginning, a venture capital firm is a business, and our business is to take $1 from our investors and give them an above market return on that investment. So we need to understand how we're going to be able to exit those opportunities, what the precedents are, what we can hope for in terms of an outcome. And the more that you know about that, the more that tells us about the fact that you're aligned in that journey. So that's just one example of the kinds of things that need to be right in the pitch. And I think as many people as you can talk to in the biz, before you're actually there, pitching for your life, to get that story right, the better. And this is actually where those really good incubator and accelerator programs really come into their own, because typically they're surrounded by a whole lot of fabulous mentors and volunteers, and not to mention the people that run them that can give you that advice.
Yeah, I think that is so spot on. I remember I didn't do that. I just went into all of the pitches and then realized, oh, okay, everyone's asking me the same set of questions. Now I'll prepare for those. But then it was kind of a bit too late, because I'd gone in just doing what I thought was the right thing to do, then starting to understand the process and then going back and refining. But I kind of then didn't have that, I wasn't spot on with my things in those opportunities. So I love that idea of doing that research first and actually understanding where you're at as a business, what people are looking for, whether you're on the same pathway in terms of that exit scenario. Because I don't know if people always think about an exit, do they? I think sometimes we start these businesses thinking they're going to be our business for life. They become our baby. And you're right, VC firm is a business, and there will be an exit of some description if you're going to fit that date. And, that looks like a lot of different ways for different businesses, but it is really something to think about as a business owner, is what is that end game?
You're absolutely right. And, various VCs, various investors will say, look, don't worry about the exit, grow a good business and the exit will follow. And to a degree, that's true. But if I just sort of use one example to illustrate my point, we invested in a business in women's health 6 odd years ago. And at that point in time, the women's health market was pretty early, and there weren't a lot of good examples of exits. So you had, unfortunately, limited investment outside of areas like fertility and continence. And therefore, you had correlated relatively few examples of successful businesses that had exited, which made it difficult to sort of understand what an endpoint would look like for those businesses. But over the course of the years since we invested, actually that market has come ahead, and we can now point to exemplars, and we can point to multiple acquirers in the healthcare sector that are interested in women's health, interested in acquiring products in that sector, and it enables you to tell a much better story about what the outcome might be for all shareholders, including the investors.
Yeah, really interesting. I think that, when you're a trailblazer, it can be a little bit difficult, but, those things, markets do tend to open up. You'll be the trailblazer at one point, but as soon as there's an example of a great business, the other businesses will follow suit. So super interesting. Yeah. I love it. Anne-Marie, thank you so much for your time. I always love to end these podcasts with one last piece of advice. So reflecting on your time in business, what would be a piece of advice that you would give other women on their business journey?
So I had about 10 things on the list, and I had to pick one.
Yeah, you can do a few. You can do a few.
No. I'm going to do one. I'm going to say, I turned 60 this year, so I'm feeling philosophical.
Uh,
Okay.
yep.
And I would say the piece of advice I would give to anybody is trying to identify what your superpower is and really work to hone that superpower. And it will be very different for different people. So for some people, it might be a brilliant technical skill, like I am awesome numerically and I do great spreadsheet modeling, for example. Some people might be really tenacious and it might be being excellent at research, or people like you, I think. One of your superpowers is that you can sell, and that's, for example, a skill that someone like me doesn't have. So it's a really brilliant skill, but equally it can be a soft skill, like
Mm.
being the person that lifts everyone in the room, being a great leader, being a great cheerleader for other people. It doesn't have to be something technical, but
Mm.
everybody's got something. And I think if you can identify it early, really work on it, make it part of your brand, then you'll be successful as an individual. You'll probably be satisfied as a person, and hopefully it will help your business be more successful.
Oh, I love it. I couldn't agree more. If all I did was talk to people all day, every day, and just, build relationships and sell, 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 and there was no other
Yeah.
parts to the business, that would be fabulous. I would love that. No, that is great advice. And I think I just love that idea that, when you do love what you do and you are great at it, it makes the business of being in business a little bit more joyous as well, which never goes astray on the hard days.
Absolutely. And if you're not doing something that you love doing, then why are you doing it, to be
Pick
honest?
something else. Yes.
Correct. Correct.
Incredible. Thank you, Anne Marie. It's been an absolute pleasure and so many amazing nuggets of wisdom. So thank you so much for your time.
No worries. Lovely to chat to you, Danielle.